Okay, good morning, good afternoon, good evening, everybody, and welcome. I'll just do a quick sound check if I can. Can I get it loud and clear? Good afternoon, good evening, everybody. Okay, it's coming through on that. So hope everybody is well. G'day Yo-Yo, g'day Bright, g'day everybody, g'day John, Gunner, Willie. Very good. All right. Very good, Rohani. Katya. There'll be a few names that I can't pronounce there. Okay, all right. Okay, looks like we've got a few people, which is terrific. G'day, Big Riverman. Okay, everybody. We'll make a start if you like. And it's my pleasure tonight, my time. I'm 8 p.m. Melbourne time, to bring in this little traders workshop. Now, what we do is, thanks Andrew. It's a bit dark in here, I know. Now, what we do is in the Asia streams we discuss a lot of concepts, but we don't really get enough time to delve deeper into a lot of these concepts. So we do quickly try and just zip over it so that we can get a bit of an understanding, but we don't have the luxury of time to go into particular details, particular setups in detail. So what I thought I would do is run a workshop where we can expand on a couple of these concepts in detail. So, all right, so I hope everybody is well. Hope I'm coming through, which it looks like I am. So let's make a start. Okay, so the overview of the topics for today is probably one of everybody's favourites, which is breakouts. But what we're going to learn about tonight is how to avoid 70% of failed breakouts. Okay, everybody loves a breakout trade. Breakout trades are easy to spot, but the statistics say that 70% of breakouts fail, and there's reasons for this, which you will see. So, what you'll learn in this workshop: what is a breakout, the types of breakouts, why do so many breakouts fail, what to look for prior to the breakout, how to identify accumulation or distribution, and what are the best types of breakouts. Okay, so what is a breakout? A breakout is when price moves outside a defined support or resistance level, generally on increased volume. A breakout can demonstrate increasing volatility and momentum. G'day, Kevin. Now, what I will do also too, guys and girls, folks, is we'll leave the questions to the end, so that I can focus on getting through and remembering what I need to speak about. So if you can hold the questions off till the end, that'd be much appreciated. So if I don't say hello, also I'm not paying enough attention to the chat. I'm not paying attention to the chat. So breakout traders enter a long position above after the price breaks above resistance, or enter a short position after price breaks below support. Now, it's important to mention here that we're just going to deal with support and resistance levels here tonight, but there are other types of breakouts, such as pattern breakouts, Donchian channel breakouts, other types of breakouts, but they'll perhaps be a topic for another workshop. So, types of breakouts. So we have a with trend type breakout, and these are probably the most common. So we have a resistance zone through here. We have a pullback. We have price moves up. Price breaks through the resistance zone. And the inverse, of course, is our price is moving down. Price hits the support zone or creates a support zone. Price pulls back. The price breaks back through the support zone. So other types of breakouts from a range. So we have our bullish scenario where we have price within the range. and price then breaks out of the range. The bearish case, price is within the range, creates a support zone along the bottom, price continues and price breaks through the support and continues on. So as we spoke about before, there are other types of breakouts, but we are just going to deal with these two. So let's now have a look at a couple of chart examples, will we? So the very first of these, we have price has come down and made a bottom here. We see a bit of an exhaustive move here. We see price has pulled back up. Price has broken through the anchor here. Price has come up here and price has created a resistance zone. Now, the time frame here is irrelevant. So price, because when we're talking price action, price action applies to any time frame. Price action is what we call fractal in nature, whereby it can appear on a weekly time frame, it can appear on a 1 minute or a 30-second time frame. The principles are exactly the same. So what of course happens here is price pulls down and price pulls back up. So we have here bullish sentiment leading to bullish order flow. And we have some bearish order flow coming through here. We can see this is corrective type price action. We can see price is pushing up here. Price is pushing up towards the resistance zone. So let's have a look what occurs next. So price is pushed through the breakout, through the resistance zone. So prior to that we had the potential breakout. Price is now actually broken out. So let's continue to walk forward. So price is broken out. Typical breakout trader will have entered here, had his order just above the breakout zone, and now we have a bearish candle. So the bearish candle now has actually taken us back inside support here. So sorry, back inside the resistance. So the breakout traders here are now already underwater. Let's continue to move forward. Okay, we have a little gravestone doji. So price is pushed up. Price has come back down and closed back at the low. So these breakout traders would have got a small reprieve. So the pressure's off, but then price is pushed back down again. Let's have a look at the next candle. Okay, so the next two candles. Doji, more indecision. Next candle, we've got a low close. So we've got the lowest close here now. So traders that have broken here are now underwater. They're now feeling pain and feeling fear. So let's have a look what occurs next. So price is pushed back down. Stopped out all the traders in the breakout through here. Price is pushed back down to here. So if you were the breakout trader here, how does this now make you feel? Imagine yourself in this situation. Breakout above here. Nice pullback. Let's jump in here. Price pushes down. If you're not already out here, you're completely underwater here. If your stop is down here, it's a massive stop. Almost here. So how does this make you feel? Maybe like this. Would that be a fair summation of how this makes you feel? Okay, let's have a look at another example. So, price pushes up. Nice pullback. Price pushes up. We've got bullish sentiment leading to bullish order flow. We've got a resistance zone is created here, or a swing on this time frame. Price is pulling down. We've got a nice weak pullback here. We've got bullish order flowers coming back in. We've got a potential breakout zone through here. Let's have a look. So next two candles, price is broken, breakout traders are in. Then we have a spinning top, just a spinning top type candle. So we've got a bit of a pause here and a bit of hesitation. So let's have a look at our next candle. Price is straight back down. So this leaves us thinking, what the? Okay. So these are two examples. So if you're caught in this, even here, you've got a bit of a reprieve here, but then straight back. So I'm guessing by now we've taken two of these in a row. I'm guessing this is what we feel like doing. And I'm sure plenty of you have been at this point. So, why do breakouts fail? So, one of the reasons is that price may not have had time to absorb the supply or demand due to the sharp move in price. Okay, so let me just grab my pen. So, price is moving up, but prices move too quickly. So all of the supply that's caught from the traders getting in here is being sold into this move. And especially if traders have entered here and they're caught, they're going to take their opportunity to get out any chance they can. So that's one example. Prices moved up too fast, too quick. Hasn't had a chance to absorb supply. Okay. So another reason is the bigger players intend to continue to accumulate or distribute holdings and will create false break situations or scenarios. You've heard me speak about this in the past where price comes up, creates a high, same again. But the bigger players aren't ready for price to break out yet. They still want it to move up, but they're not ready. So what occurs, just get rid of that, sorry about that. So what often occurs is the larger players will purposely push it back down again because they've been accumulating from here, and here, but they perhaps haven't got their holdings. They don't want to break and move too hard. So what they do is they use part of their holdings to push price back down again. Well, who do you think is sitting down here in a lot of cases? Picking up the excess supply. Right? It's the bigger players. Not quite as obvious. And then when price is ready, then it will move higher. So that's another reason. So another reason is bigger players intend to reverse the trend and are still accumulating or distributing their holdings. So let me just step back up a bit so I can draw this. So we have a situation here where price is coming down and we get this situation here where we get a false break through the low. Now, what's happening here is all through here, the bigger players are short. They're short all the way down here. They've been adding to their positions. They've got massive holdings. And price is starting to move up here. Price is showing a bit of a move here. Well, rather than let price continue up this way, they're now distributing their holdings throughout here. And they could be distributing their holdings through here, but they don't want price to start to move up too high. So what they will purposely do is continue to place sell orders and push it down, push another leg down, create a false break situation down here where they can distribute more of their holdings, continue to distribute down here, and then they finally let it go and it moves to where it should. But down here, they've unloaded the majority of their positions. Now, those of you that watch my streams will know how these anchors to the trend get protected, and they're being protected a lot of times by the bigger players because they know when price breaks through, the chances are we're going to get a sharp move, because what will happen then is it will create buying orders, bullish order flow, and also short covering from those that are still in here because their stop will be here. So I know that's a little messy, but that's one of the principles. Okay, so bigger in plays. So that quite often that's how trends reverse, as we said before. Push up, and then price begins its trip down. But the bigger players have been able to distribute their holdings through this period here. They don't want it to push down yet. So they'll play these games in here and distribute. Okay, now here's another good one. Just bear with me a moment. So bigger players may be testing or probing the level to ascertain potential new supply or demand. So prices, oh sorry, I'm drawing over myself. Price is coming up. Now, bigger players might be wanting to accumulate and push price higher, but what they want to do is they just want to see what's above. They want to see what orders get triggered above. So what they'll do is they'll put a probe, they'll put orders and they'll force price up to see what occurs. See if there's a lot of buying orders that will push price. If there's not, or even if there is, they may still push it back down. So that's another reason. So now there are other factors, but ultimately we'll never know. So does it really matter quite often what's going on? No, it doesn't. So what to look for prior to a breakout. So we just discussed before that it doesn't really matter what occurs, what the reason is, what the reason the bigger players are doing what they're doing. What we want to see though is we want to see their footprints. We want to see their signatures, whether that be price signatures or volume signatures. We want to see some of their signatures that help us with the breakout. So there's no guarantees, of course. Now also, just stepping back a bit as well, that doesn't mean these breakouts that we spoke about before and that you saw before, that doesn't mean that these breakouts can't work. And let me just step back up a moment. Sorry about this. Okay, this one here. All right, that doesn't mean that these don't work. It just means they have a low success rate. See these here? Because price is moving too fast. That's all it means. And the success rate is about 30%. So if you see these and they continue, that's one that has worked. So let's keep going. Get to watch all that again. So what to look for prior to a breakout. So what we want to see is a steady trending environment towards the breakout level, which is peaks and troughs. So one of the very first things we want to see nice trending action leading into the breakout zone. Price generally getting tighter, squeezing, ranging or consolidating just prior to the breakout level. Let me just get rid of that. Can you see this here? We want to see signs of accumulation or distribution prior to the breakout level, such as continuation patterns. Obviously with our trending environment. What's another example? Okay. Volatility contraction, pennant. It's a continuation pattern that's displaying a holding pattern from the bullish order flow coming in here. Price hasn't broken out yet. Signs of shakeouts and traps prior to the breakout level. Okay. Signs that supply or demand has or is being absorbed, including reduced volume and range. So we spoke about that before. This is the breakout level here, of course. Oops, sorry, that's probably not a good example. Right, so signs where we've got continually higher lows leading into it. Price is getting very quiet leading into it. Signs of accumulation. So let's have a look at some examples of what are the best types of breakouts. So we did some hand drawings before. Let's have a look at some actual drawings. Oh, sorry. Okay, bullish example. Resistance zone. Got our resistance zone across here. Price comes in. So here's our classic bullish pressure leading to the breakout, but demonstrating accumulation. Let's have a look at the inverse. Price comes down, creates a support zone, pushes up, pushes down. Price is in here. This is basically also a barrier triangle, ascending triangle at support. Let's have a look at an example in a range. Want to see price come up, create the same accumulation. Price is absorbing the supply, and we're getting higher lows. Inverse example, range, support, testing support. What other patterns are there? We spoke about this just before. Price comes up. Here's our ABC, under support. Under resistance. Some of you will recognise this. So, the inverse, the bearish example, price pushes up, we've got a lower high. Now here we've got a little bit of a shakeout. Bearish pressure. As long as price is holding in this region, we have to assume that price is going to break through. One of the principles that I look for is when price approaches a boundary with strength, I expect a breakout, but I watch price action around the breakout for signs of what it's going to do. Let's have a look at some chart examples. Prices come up, prices push down, prices come up again. We've got bullish pressure coming in. Got bullish pressure coming in here. Here we've got our ABC. Shake out through the low here. Or a falling flag. So there's our accumulation before the break. Let's have a look at some other examples. Okay, this has been marked. This is out of my playbook. So here is the typical consolidation before a breakout. So here's our range. Here's our resistance. We've got an uptrending environment. We've got prices tested 3 times. Prices created the resistance here. Prices tested 3 times. You can see here we've got higher lows. So we've got buying pressure coming in. Look at buying pressure in this area. And here's our breakout. Tested back the high here. See how fast it hit this one as well? But it's this area here that we're interested in. So see the pattern in here. Let's have a look at another example. So here is our cup with handle with the consolidation as the handle. A cup with handle is basically this principle. Price moves down, price moves up, creates the cup. Here's the handle. Now we've got the handle area. So price is pulling in. Right? You can see this is so you can see this is actually a stock. It doesn't matter what it is or the time frame. So you can see even though price is gapped down here, so it's gapped down, it's holding the purple 20 SMA. But see the swings. Away we go. There's our breakout. But here's our accumulation. And this is over 1, 2, 3 days. So the buying pressure come in here with the volume. Big spike up here. Igniting volume. Pause. Look at the volume on the close. See this here? These are footprints of the larger players. See, it's gone all quiet here. Not excessive breakout volume, that doesn't matter. Price is opened, straight out. Here's our telltale signs here. It's gone quiet. Absorb the supply. Let's have a look at another one. Price is pushed up. Price is pushing down. Price has retested the breakout. Price is holding in along here, getting tighter. Away we go. See how quiet price has got in here. See how well it's held that level? See how narrow the price has gotten through here? This is what we must see. This is what we want to see in these types of situations. So when I speak about a breakout and approaching a level, such as Aussie New Zealand tonight, this is what we want to see. We're not exactly seeing that, but I think it's broken anyway. I can't see it. I probably can. This is what we want to see. Let's have a look at another example. We can never have enough examples. So, price is pushed down. Create a bit of a low here. We've got a sharp move. Here we go. Price is pushed up. Price has hit the 38 of whatever this level is here. There's obviously a range up here. Price has hit the 38. It's using that as support and resistance. Price is pushing in here. Got a tiny little accumulation in here. So we've got a higher low here. Price is broken. Let's have a look at another example. Price is pushed down. This is in a range. We've got our ABC. Price is pushed up to the resistance. Little false break, little probe. See that one there? Little green one there. Little probe. Price is pushed back. Price is pushed up. Created another little consolidation. And price is broken. See the effect. Accumulation. See the move out here. Okay, so what we've learned in the workshop tonight: what is a breakout? Types of breakouts. Why do so many breakouts fail? What to look for prior to the breakout? How to identify accumulation or distribution? What are the best types of breakouts? So this brings us to the conclusion of our workshop. I hope this has been informative. And while we did look at quite a few examples, I suggest that what you do is go and have a look on your own charts now for examples and take some copies of those for yourself so that you can begin to understand this concept, because this will make a huge difference to your trading, especially if you're a breakout trader. So, do we have any questions, folks? Okay, g'day Marinello. Thanks Kevin, Willie, Spanker, Paul. Okay, yes I can, Marinello. Well, once you've identified the breakout pattern, a very good question. Absolutely. I do Spanker, but quite often it will only... Yeah, okay, Willie. Look, it takes... I'll answer Willie's question. It takes the form of many different types. Now, I'm sorry, I've missed... Okay, Marinello's question, and great question, sorry. When price is creating our setup, what we can do and what we do is put our order above this area. Say 5 pips above this area here. That's what I generally do. And that's what we did this morning on Aussie New Zealand, and it kept us out of the trade because it pulled back down. So what this allows you to do also, you've got to remember when you have a move like this, where's our stop loss? It's either got to be here or it's got to be right down here or some arbitrary area here. When you wait for suitable patterns here, it allows us to put our stop very close to the breakout. Because chances are, if this is going to be false, this could end up being a really bad false breakout. There you go. All right, I'm in that somewhere. So the answer to your question is, this gives us permission to put a breakout order straight above. Let's quickly flick through and have a look at a couple of the examples because we know that this is going to break hard. See this here, when we're seeing this, I've got no problem putting a breakout order in. And here's my stop. See how quickly you reached 1R. See this? Quite often this will reach 1R. Very quickly, see this? Look at this one here. See here, even if you put your order down here, you can comfortably put your breakout order in here, because look at all this. Do these work 100% of the time? No, of course not. But this is how you increase your probability on breakouts, because this is price action. This is the cause. You hear me talk about cause and effect, supply and demand? This is basically it. And you can too, Paul. Absolutely. Absolutely. That's what I try and do. As soon as we get a decent pop and a break, I try and bring my stop in. So there we go. Okay, that last chart said, Willie. Okay, so this is basically A, B, and C. And you hear me talk about B being a critical area. The prices come down here. We can see, look at the strength in this move here. So that's a bit of a giveaway there. We've broken through the channel, or the short-term downtrend line. You can, Steve. So see, we've got price pushes up here, Willie. This is a very small accumulation here, but it's still valid. And you probably can't see it, but here is the 10 period. So you can see it's trailed along. The 10 period's actually trailing in here. So you can see prices hugging it, indicating, so we've got our extension, cross to the 10, breakout. So Marinelle said, when do you exit? When you see this big move, what I try and do is if my stop, let's go to a different slide that's a bit easier to see. Okay, there it is there. So now you can manage the trade however you want, but what I try and do when I've reached 1R, which is 1 times my risk. So here's my initial risk here. When I've reached that, I like to take 25 to 33% of my trade off. And then when I reach 2R, I'll take the same. And then what I try and do is, so 2R would be up here, let's say. So then what I do is I try and leave the rest for the runner. I'm happy to get my profit here, because you've got to remember also, let's have a look at the previous slide. See the big move here? See what it's done here? It's given back half of this move. So you imagine you're in here and you're hanging on, you're hanging on, you're hanging on. How are you going to be feeling here? So by taking 1R, 2R, and my stop say at break even, well, I'm still protected as well, but I've taken between 50 and 66% of my trade off already. So I'm well and truly in the money. I've already taken money off the table. So now my stress level on this trade is down. So if this comes and stops me at a break even, so what? I've still banked 1R, 2R. So the overall on the trade is still going to be probably about a 1.3R trade. How's that? Yeah, it's through an E8, Steve. Or you can put 3 separate orders on. Yes, absolutely. If you do it though, what I suggest you do is have your orders maybe 1 pip apart, so that you can use the tool and grab them and move them around. The benefit with the 3 orders too is you can maybe have 1 order close, stop, 1 down here and maybe 1 down there a bit if you need to. Okay, VJ, if you've got this right, let me show you all these valid breakouts, and you will see the big move. See here, straight back to this point here. See, because there's no accumulation. Same with this one. Look at this one. Here's a classic example right here. Look at this one. Okay. So there's no more questions, guys and girls. There you go. I did even have a blank slide. Now, I'm just going to show you one more example of what to look out for in this situation, then we'll call it a day. Now, we spoke about nice trending price action into the resistance. But you might say to me, well, Mark, here's a bonus. Here's a little bonus for you. There we go. All right, we're a little bit over time. You might say, okay, Mark, I've got this sort of price action leading into it. losing momentum. What do? It looks like it's going to fail. Yes, when I see this sort of price action, immediately I'm thinking it's going to test support or resistance, and it's going to probably, because this sign here is probably a sign where this trade is getting out and it's causing this whippy price action. It's a sign often of distribution. Now, in cases like that as well, the only time, whoops, okay, I need to probably run that again. Okay, there we go. Okay, in cases like that, the only time I'll consider it is this. When price then resets into accumulation. How's that? All right. Okay, everybody. All right, we've gone for 3/4 an hour, so that was good. So about 30 to 40 minutes is ideal for those. So before we go, everybody, just give me a score out of 10 for the lesson. 10 being excellent, 1 being horrible, don't want to see it again. Mark's terrible. Eight out of 10 on sale. Tough crowd with on sale. Okay, very good, everybody. Thank you. Now, this will be recorded as a workshop. Now, don't forget to go and check out the Trading Academy. There's a lot of... before we go, hang on. I'll just transfer screens. Hang on. Oh, I can't, sorry. I've lost it. I'd have to log back in, but don't forget to check out the Trading Academy, because there's a lot of videos in there. The ones we've put a separate module called the workshops, so have a look in there. So, all right, everybody. So as usual, remember price action is king. That's all we spoke about tonight. No indicators, all price action. So as usual, remain disciplined on your trade entry and your trade management. So, all right, everybody, thanks for your company, and we will see you again. Bye for now.